outlook: confident about the second half. Political and economic developments mean that the performance of the individual markets will remain volatile. The new CEO summarizes the situation: the development of inflation, cautious consumer sentiment, and intensive market competition will continue to have a material impact on the performance of all business areas. The commissioning of new facilities at different locations will also generate additional startup costs and depreciation. But the Belfood Group is ideally positioned in strategic terms and well equipped of the challenges of the future, with a broad range of products in all price segments. We are confident about the second half of 2024, emphasizes Marco Chance. Investment program on course. The investment program in Switzerland is proceeding according to plan. In Onsingen, shell construction has been finished on the slicing center, logistics center and cattle slaughterhouse, and work is now continuing on the interior construction. The next step on the construction of the high bay warehouse in Hilkona and Schaan has started with the installation of the steel bay. All business areas are successful. Bell Switzerland increased its sales and once again posted a strong performance, even though bad weather had been plaguing the barbecue season to date. Bell International gained further market share and is growing at an encouraging pace in spite of subdued market development. The new independent business area, Hubbers Stutag, substantially increased its sales volume, especially in the organic segment. The Iceberg business area grew in all markets. The new facility in Marchtrenk was the biggest driver of growth, and the new range of freshly cut fruit products resulted in the acquisition of new customers. The Hilkona business area generated an excellent result in its core market of Switzerland in particular. The Hugli business area improved its margins in spite of higher procurement costs. Stronger competitive position. The Belfood Group increased its volumes thanks to a stronger market presence. The higher overhead and personnel costs are explained by this positive development as well as by inflation and growth. Although consumer demand for less expensive products continued, the competitive position was able to be strengthened through targeted product range management and innovative initiatives. The growing pressure on sales prices and persistently high costs posed a challenge, says Marco Chance. We successfully withstood with this pressure with our productive capacity and differentiated product ranges. In spite of challenging framework conditions, the Belfood Group posted a good operating result in the first half of 2024. At 2.3 billion Swiss francs, net revenue adjusted for foreign exchange and acquisition effects was up to 113 million Swiss francs year on year. The figures are encouraging. We gained market share and grew organically by more than 5% thanks to the consistent implementation of the business strategy, the strong operating performance, and efficient cost management, comments Marco Chance, the new CEO. At 63 million Swiss francs, EBIT was up to 0.2 million Swiss francs. The half-year profit, about 45 million Swiss francs, slightly below the prior year figure, but adjusted for the lower foreign currency gains in the financial result. It's on a par with previous year. Belfood Group posts encouraging organic growth of 5%. About the Bell Food Group. The Bell Food Group is one of the leading meat processors and convenience specialists in Europe. Its range of products includes meat, poultry, charcuterie and seafood, as well as convenience and vegetarian products. With different brands such as Bell, Iceberg, Hilkona, Hughley, the group meets a range of customers' requirements. Its customers include retail as well as food service companies and the food processing industry. Some 13,300 employees generate annual sales all over 4.5 billion of Swiss francs. The Bell Food Group is listed on the Swiss Stock Exchange.